After many gravity-defying sessions, commodities tumbled back to earth today. It was the first major retreat in quite some time. So, do you buy or sell? Joining me now to discuss all this, we got Kevin Kerr, editor of Resource Trader Alert at DailyReckoning.com. He also columnist for Market Watch. Craig Russell, our man in Chicago, senior Forex strategist at ODL Securities. And Frank Holmes, chairman and CIO of U.S. Global Investors. His company reported earnings today. It was a moonshot. This quarter's earnings were more than 400% higher than in the same period a year ago. Frank manages their global resources fund, rated 4 stars by Morningstar. Well, anyway, Frank, congrats as always. So what do I do here, Frank? Because, you know, my instincts, this is just a big speculative bubble. It started out based on some fundamentals, but it's gone way too far. Hedge funds don't know what they're doing. A lot of people buying exchange-traded funds. The retailers are getting in too late. But you tell me, am I wrong, or is this going to gold's going to 1,000 and everything else is going higher?
Well, I think short-term you're absolutely right, and in fact, we have our highest cash positions we've ever had in our portfolios.
How much cash, Frank?
Well, some of the portfolios are over 30% cash, waiting for this correction to take place.
So you're a near-term bear.
Oh, yes, absolutely.
How long are you a bear? I like this very much. I've been looking for a bear all my life on this subject.
I have been a bear now for probably 3 months based on mathematical modeling we use. And any time gold moves up 30% over 60 days, copper moves up 100% over 60 days, there's a 99% probability of a correction. And we've gone back over 15 years of data, and we update this every day. So we're due for a correction. But what's driving this?
Hang on, Frank. Hang on. I want to get Kevin in here because you say buy him back. Frank is saying, no, wait just a second. Now, this is very interesting. We've got a little debate here.
Well,
What's
I'll
your
just
position?
say this. You know, this is not a meltdown. This is a correction. It's normal. These markets are going to correct. We've been saying this as well. And the bottom line is you have to look for these opportunities when they present themselves. And right now we have gold at 26-year highs. Sure, we're going to get a correction. We've got the dollar on a year low against the euro. Of course, we're set for a correction, and it's a normal correction, and it's healthy.
It got slammed today. I mean, today was a beauty. Let's see. Lead down 6%, nickel down 6.5%, zinc down 7%, gold down 4%, silver down 6%. I don't know. It looks like it's just getting warmed up for a further decline. Are you worried that the Federal Reserve is going to make Frank's position come true? That is, if Mr. Bernanke gets some religion, he goes back to numerical inflation targeting, he pulls excess reserves out of the banking system, that'll deflate commodities.
Well, I'll tell you what, we haven't heard him mention that again since he said it the first time. And it does concern me, of course. But, you know, bottom line, Larry, the same thing over and over again. We're seeing these commodities are in demand. And these markets correct. That's a free market. When it gets overpriced, it corrects itself, and it moves higher.
Craig Russell, when is Bernanke going to regain religion? I mean, he hasn't talked about inflation targeting. He hasn't really been tough. Barry Ritholtz on this program calls him the Neville Chamberlain of monetary policy, which is a little hard, but I certainly like the poetic turn of the phrase. So, and that's Craig on the dollar. Isn't that why the dollar's falling? Because the Fed's not tough?
I have to say, Bernanke basically discredited himself by coming out on a weekend with the interview with Maria Bartiromo. The foreign exchange market did not like that interview
but
at all.
It wasn't just the Maria kerfluffle. It's a lot of other things.
Oh, it's a lot of other things.
He's just not been tough. He's not been
tough at all.
He doesn't sound mean, nasty, and brutish on inflation.
He's not the same Benjamin Bernanke who wrote Zero Bound, a monetary environment for the next 40 years. He's not the same person who, again, talking about shrinking the money supply and basically even talking about cutting interest rates sometime in the future, which is what we think is going to happen by the end of the year or the beginning of next year.
Cutting rates? Cutting rates? Well,
yes.
So how low is the dollar going to go, Craig? I mean, where's the dollar? Went under 110 yen. It's now closing in on 130 euros. That's pretty pathetic for the currency of the greatest country in the world, with, I might add, a booming economy. What is wrong with the greenback?
It's not necessarily what's wrong with the greenback, is whether we want this to happen, and we believe that this is something the U.S. government or the U.S. financial leadership wants to happen. We're not going to change our spending or our consumption habits. The only way to correct these imbalances, and we are talking about serious imbalances globally, is for the U.S. dollar to devalue by almost 20% versus other currencies.
That is a prescription for economic and financial disaster. Craig, the yuan, a little more appreciation, falling through the 8.0 level?
It is going to appreciate. We're really seeing the pressure on dollar yen. Really, Asia is really coming finally.
Dollar yen or dollar yuan?
The both of them. Dollar yen is the proxy for the RMB right now. More people can trade dollar yen. It's pushing lower, but dollar yen has seen more weakness, and dollar yen should see a lot more weakness going into the year.
So in 5 words, you still shorting the dollar, my friend?
We look at today as a corrective opportunity, and we are still believing a short dollar position.
All right, good. I'm going to take the other side of that trade, just like I want to go short gold, because I believe Bernanke's going to have a comeback. He has to. His expectations are now so low. Coming up, the embattled dollar, as we were discussing. Is the White House leaning towards a weak U.S. currency? We're going to go live to the Treasury Department and talk about it. Keep it tuned to Kudlow and Company.
You stay physically fit, you're at the top of your profession, and enjoy the finer things.
Hey, sorry I'm late. I ordered for you. Oh, thanks.
But there's still one thing missing. Your smile. To permanently replace or improve your teeth and your self-confidence, Nobel Smile, the tooth fairy for adults. To find your Nobel Smile dentist, call 1-877-MY-NOBEL or visit us online at nobelsmile.tv.
At UBS, financial solutions come from listening very carefully to what our clients say, but even more carefully to what they don't say. You could call it the commitment to understand. We just call it you and us. You and us, UBS.
Imagine you had a great idea and shared it with the world. To make it a better place. To make it cleaner and quieter. To make people more comfortable. Businesses more successful. The world more connected. Would an idea that great ever fly? It will, and like nothing else. Boeing, forever new frontiers.
Are you one of the millions of people struggling to learn a new language? Well, thanks to our breakthrough software called Rosetta Stone, learning a new language is now incredibly easy and a whole lot faster.
I probably learned more in the first 2 weeks than I have in months of taking formal classes.
Rosetta Stone is so fast and effective, it's used by the U.S. State Department, NASA, the FBI, and top Fortune 500 companies, and is the world's leading language learning software.
It's almost like having your own person there teaching you, your own private tutor who is just very relaxed in your home with you, sitting there teaching you the language.
Rosetta Stone is the fastest way to learn a new language. And to prove it, we'll send you our amazing demo CD absolutely free when you call.
This really is a great program.
I believe that you can learn any language with this program.
So, call now and see for yourself why Rosetta Stone is the fastest way to learn a new language, guaranteed.
For the love of money, how you can score cash playing the dating game. The big business of relationships. The Big Idea, tonight at 10 Eastern and Pacific on CNBC.
All right, welcome back. The dollar did show some muscle today, but lately it's weathered pronounced weakness against both the yen and the euro. Now, our next guest, Tim Adams, Treasury Undersecretary for International Affairs. He said, and I'm going to quote, "We should allow markets to set the values of exchange rates, and probably we should all refrain from not only intervening, but commenting on exchange rates," end quote. However, the Wall Street Journal editorial page responded by saying this, quote, "The notion of a free market in currencies is in any case nonsensical. All currencies are manipulated since governments print as many banknotes as they wish. Exchange rates are set by a central banking cartel." Well, here, smack in the middle of that debate, is Tim Adams, Treasury Undersecretary for International Affairs. Mr. Secretary, welcome to Kudlow and Company. It is a great pleasure. And would you care to comment on this wonderful, intellectual, rampaging currency market debate?
Good to see you again, Larry. It's been a long time. I'm glad I can be back on your show. You know, Larry, the key is we don't engage in beggar-thy-neighbor policies, and we don't seek to manipulate our currency for competitive purposes. As the Secretary said repeatedly, we believe that exchange rates set in open and competitive markets based on relative fundamentals and the relative fundamentals of the U.S. economy is extraordinarily good.
Well, Mr. Snow has said that on this program, and as you know, I have the highest regard for him. But what the Journal editorial board is saying is that these markets are not open and not competitive because they're run by central banks who have monopoly printing press power, right? That influences the currency value, and it's a cartel. So is the Journal right, or is you saying the Journal is wrong, basically? Is that your view?
I'd say it's much more complicated. That is certainly one school of thought, and I have enormous respect for the editorial page of the Wall Street Journal, but I think it's much more complicated than that in this situation. Again, our policy is well known. The Secretary's reiterated a number of times, but we do not engage in beggar-thy-neighbor policies. We do not seek to manipulate the currency for competitive purposes.
All right. I'm going to take that as a Journal is wrong. That's what I got from that, and I appreciate your candor on that subject. Now, let me ask you this. We have seen some additional movement by the Central Bank of China, and it looks like the yuan is now going to be penetrating the 8 yuan per dollar, 8 renminbi per dollar. That's what you want, right? This is a victory following your report where you said China is not a manipulator.
Well, Larry, our engagement with China is much more broad-based than just the exchange rate. We've advised them, and they have agreed, that they need to modernize their financial service sector. They need to strengthen the underlying financial infrastructure. They need to change the composition of growth. They need to move away from an investment-led, boom-bust kind of growth cycle to one more focused on consumption in the non-tradable sector. And, of course, the exchange rate and greater flexibility is a key to both of those, but it's also important itself, so that they have monetary policy and flexible monetary policy to deal with the various boom busts that we've seen throughout the recent history of China.
All right, Mr. Secretary, as you probably know, in yet another Wall Street Journal, this time a commentary by Stanford professor Ronald McKinnon. He disagrees with you. He said, we ought to leave the Chinese yuan stable. It's good for China and it's good for the U.S. But he also made this interesting historical point. For years and years and years, we kind of semi-bashed Japan, and we wanted them to appreciate the Japanese yen. And so they did, big time, and wound up moving into, what, a 10 or 12-year deflationary recession. Are you worried that appreciation of the Chinese yuan will create deflationary conditions in China?
Well, first of all, Larry, I think that's a misreading of the history of Japan. Japan found itself in a bubble, a real estate bubble that then burst, was a product of monetary policy, not exchange rate policy per se.
Not two sides of the same coin, Mr. Secretary? Monetary and currency policy? Not
Larry,
two sides of the same coin?
Larry, let me say that the Chinese disagree with Professor McKinnon, who I've spoken to. I had him here, invited him here this summer to have a long conversation along with a number of other academics. But the Chinese themselves disagree with Professor McKinnon. They agree with us. They agree with a global consensus that they need more flexible exchange rates, they need to change the composition of growth, and they need to modernize their financial service sector. They have said that from the very top of the political pyramid all the way to the bottom.
All right, so no to the Wall Street Journal editorial board, no to Professor McKinnon. We're covering a lot of ground, and I love this, Mr. Secretary. Thank you. Last question. Do you believe that there is a clear link between trade deficits or current account deficits and exchange rate levels? We have a chart that shows really that link is awfully unclear. What is your take, sir?
The link is awfully unclear, as is the relationship between budget deficits and current account deficits. I think the academic evidence, the statistical evidence shows us those linkages are pretty weak.
Well, you know what, Tim Adams? I'm not even going to ask you where you think the dollar's going. I'm not going to ask you to comment directly on the Wall Street Journal article, because that would be wrong, and you ain't going to answer it anyway, but you were forthcoming on these other issues, and I thank you, sir.
Sure, Larry. Thanks for having me on today.
You bet. Many thanks to Undersecretary Tim Adams. Our market mavens are going to give their 2 cents on this discussion when we come back. Please stay with us. Kudlow and Company. What to do about the dollar? Because you know what? The movements of the dollar may underpin commodities, which in turn may underpin stocks and inflation.
I'm Maria Bartiromo. Tomorrow on The Closing Bell, the first oil company to suggest price caps for gasoline. Is Gulf's plan good for business and consumers? We'll be talking with the CEO of Gulf Oil on why he's now pushing for price locks. We'll see you tomorrow on The Closing Bell, beginning at 3 o'clock Eastern, here on CNBC.
When I say diabetes testing supplies, I bet you think of a drugstore. Well, think again. First, you got to get yourself over there. Wait in line. Pay money up front and wait for Medicare reimbursement. Well, I have an easier way. I get my supplies sent to me by Liberty Medical. They go ahead and bill Medicare and the insurance company. They send you 3 months' worth, no charge for shipping. They even tell you when it's time to reorder. Now, drugstores I know, they won't do that. So if you have diabetes and you're on Medicare, there's an easier way. Call Liberty. They can help you live a better life.
Call Liberty today at 1-800-398-5865 for more information on home delivery of diabetes testing supplies. That's 1-800-398-5865. Call Liberty today, 1-800-398-5865.
Introducing StreetSmart.com, exclusively for active traders. New web-based trading from Schwab with everything just one click away. We're talking streaming quotes, charts, and watch lists. That means with one click, you've got what you want when you want it, all in one integrated trading window. Because, hey, it's your time and your money. Get it all now for as low as $9.95 a trade. Demo the power today at schwab.com/StreetSmart. Serious web trading made simple.
Born rich and living the high life, but they had to earn their billions. How did they do it without Dad's help? The Maloof Brothers, American made, 8 and 11 Eastern, CNBC Tonight.
Making money in the stock market can be puzzling without a proven trading strategy. Hi, I'm Michael Parness, CEO of Trend Trading to Win, and I became a multimillionaire simply by recognizing predictable market trends. And now I want to share my trading strategies with you.
My account went from $8,000 to over $60,000 in less than a year.
In my first month, I made over $16,000. It's the best week that I have. I made $39,000.
This is the most powerful program I've ever developed, the 1 Hour Trader, that you can use to secure your financial future in as little as an hour a day. I'm going to teach you 3 money-making strategies that you can use to start making money the very next day. A free seminar is coming to an area near you. All you have to do is show up.
Call 1-800-873-6301 and register for the free seminars in the New York tri-state area, May 31st through June 8th at the locations on your screen. Call now.
Welcome back, everybody. Craig Russell, I'm going straight to you. On the basis of what Undersecretary of the Treasury Tim Adams just told this program, tomorrow morning, are you buying or selling the U.S. dollar?
We like the U.S. dollar strengthening tomorrow, Larry. We agree with you on the short-term basis.
On the basis of what Mr. Adams said?
On the basis of what Mr. Adams said, yes.
All right, that's fascinating. Does that mean you're going to sell yen?
Yen's a little volatile for us right now. We're actually stepping back. Today was a bloodbath on trading desks. I don't know anyone who made money today, and we're actually being very cautious right now.
In that bloodbath, I can hardly get that awful word out. In that bloodbath, the dollar emerged kind of victorious, did it not?
It certainly did. The strength of the dollar today, the depth of this correction surprised many people. Led by gold. Gold has so far overshot itself, and once we saw the rotation out of gold into the dollar, it was aggressive and it was profound.
You know, Frank, let me go back to Frank Holmes, who has one of the most extraordinary records in all this. Frank, to me, the American economy is strong. We've just renewed our lower tax rates on capital investment, and I have to believe at the end of the day, at the very bottom of the barrel, Mr. Ben Bernanke will be tough on inflation. Frank, how long will you keep your cash position against gold?
Well, I think that we're in a secular bull market, Larry, for all commodities, but we're due for some big corrections. In particular, copper worries me more of the housing slowdown.
Copper.
But gold can correct here 15–20%. Today we're a buyer of gold in these type of big declines in one day. I think that gold is very unique. It's not inflationary right now. It's simply the petrodollars are so big and they're diversifying into gold. They're not selling the dollars to buy gold. They're just diversifying. Russia's made the announcement, China, the Middle East, and I think that that's where you're going to see this ratio of gold to oil approximate back to 15.
All right. So you're a buyer. Tomorrow morning, you're buying gold.
If gold is down, I'm a buyer.
That's terrific. And copper, I missed that. You said copper is a little different story.
Copper is a different story, and I am concerned about copper because the housing market is slowing down, and America's consumers are 20% of the world's GDP, and housing has a huge multiplying effect. And 400 pounds of copper go into every house. So if housing is slowing down, Copper consumption is going to slow down. But we have a real interesting conundrum. We have these pension funds buying commodity indexes. $80 billion has gone into them, and they basically inflated the commodity cycle in this past quarter.
Do they know what they're doing, Frank? Do these guys, and I want to ask the same question, do they know what they're doing? Do the pension funds know what they're doing with this volatile area? Do the hedge funds know what they're doing with this volatile area? Does retail going into exchange-traded funds know what they're doing in this volatile area?
I think that a lot of the pension funds are just basically diversifying because they're afraid of owning a mining stock or an energy stock. So that there's a simple way of diversifying. And do I really think they know what they're doing on these? No. I think they're just simply using some math discipline to diversify.
All right, but diversifying is a pretty good thing to do, so there's nothing wrong with that. Kevin, take us out of here. Tomorrow morning, commodities, what are you going to do?
I'm going to do it tonight, Larry.
Tonight?
On the pullback. I mean, we look at gold, we look for value. The bottom line is that there are some people invested in this market that probably shouldn't be here, and this market correction probably clear a lot of them out. That is normal market activity.
The flotsam and jetsam,
exactly.
the weak
flotsam and jetsam,
the weak
the
hands
commodities
have just
trading.
been blown out.
Exactly. And some of these funds don't belong here, and this market will shake out the people that aren't supposed to be.
If the Federal Reserve keeps tightening policy, as I have now come to believe they will, how does that impact your outlook?
Long term, I don't think it does. I think
really?
I really don't.
Really?
No, I just think
if they pull money out of the system, you don't think that'll deflate commodities?
I don't at all, no.
Wow, that is really something. Anyway, thanks to Kevin Kerr, Craig Russell, and Frank Holmes. Craig?